right, ladies and gentlemen, good morning. Today is June 10th, 2020, and I'm back with another live show and some interesting stuff to look at this morning. And so, without further ado, let's get started here. First thing I wanted to look at was obviously the S&P 500. Pretty amazing that we got a rally all the way back to really, really close to where all the mayhem started, right? Actually, it's incredible. I don't think anybody expected a V-shaped rally to come all the way back to literally, where the market was sort of shrugging off the COVID virus back here in the early part of the year, and then all of a sudden it mattered. I've talked about that before. What was the most fascinating thing to me was that in January that was big news, and the market kind of spent almost an entire month. Well, actually, yeah, an entire month just shrugging it off. Right, it was just a problem in China and this and that, and then all of a sudden it sort of came to roost over here, and then boy, it was lights out. It was like 35%, and then market's been recovering on hopes for reopening and an economic recovery and all that good stuff, along with obviously a lot of support by the Fed. So, and by the way, today is Fed Day, right? So, not much they can really do except talk now that interest rates are essentially at zero. So the Fed's cut rates all the way to zero, expanded the balance sheet to I'm losing track, but maybe like 7 trillion or something like that. And of course, we've had some really wild and debatable economic numbers come out. But regardless of that, you're starting to, and I'm sure you guys have probably seen this, but starting to see a little froth in the market, right? Um, Check it out. So this chart I have here has the RSI on it, and I have 70 and 30 as sort of the thick lines here. And then I have 80 and 20 as these dashed lines. And occasionally, like check it out, look at this. Back here at the end of February, RSI got all the way down to 20, which is practically unheard of. But anyway, my point is right now is that once you get that RSI over 70, that doesn't necessarily mean that you're going to get a correction. I mean, check it out. Back here late last year, look at that RSI. Interesting how there was kind of a negative divergence back then, right? See that? Negative divergence right there in January on the RSI, and then of course that wasn't really what you call negative divergence. Negative divergence is when the market is kind of is going up, but the RSI doesn't make another high. But anyway, regardless of all that, anytime it gets over 70, and let's see, a couple days ago on Monday, it looks like the RSI got to 74 and a half. So now it's starting to come in a little bit. There's a couple other charts I want to look at here on the S&P. Um, Check it out. There's the proverbial death cross, right? Which, interestingly enough, I mean, the death cross, I don't know how far that dates back to, but in recent years, or ever since I can remember, typically by the time you get a death cross, the market's already sort of bottomed out and has rallied back. And so I saw someone comment recently that basically, this was kind of interesting to me. But basically, what you got here is like, a multi-year market cycle all compressed into, you know, 4 or 5 months, right? So like back in the old days, right? Back in, stocks traded in fractions and paper stock certificates and all that good stuff, like the old days. You'd get a bear market 35% sell off that would take, months and months and months, to manifest, and then the rebound, and so this could be like a, 2-year chart or something like that, but everything happens faster now, right? But amazingly enough, the economic numbers that are expected to come out and are coming out are absolutely abysmal. And so the market is trading on a lot of hopium. Um, it seemed to me we had that consolidation period like back here. That seemed like kind of a reasonable level. You know, sometimes, well, sometimes, a lot of times the market gets it overreacts on both sides, right, in both directions. And so, whether this was an overreaction is debatable, but then you get the rebound, and it kind of found like a level here, just under 3,000, which seemed like sort of, it seemed like sort of a decent spot for consolidation. And so, I think that the breakout from here, which incidentally, let me mark that correctly. This particular day when we had this gap up, it was Monday 518. If I'm not mistaken, that gap up was based on that company mRNA claiming that that they had a vaccine that was going to be imminent and this and that. You haven't heard too much about that recently, or at least I haven't followed it that much. But anyway, that particular day on that Monday that was a big gap up, and that kind of kicked off this latest leg of the rally here, which is basically just momentum buying. And of course, we're seeing all kinds of crazy stuff now happening. I'm sure you guys have seen this. People buying bankrupt companies, and every day, there's a lot more. It seems like there's a lot more animal spirits in the market, and you're hearing about, like, all these young people trading on Robinhood and that, and speculating. And so the public's kind of getting involved, and it could be because so many people are unemployed, and those unemployed people are getting, I think it's like around half of them are making more money than they were when they were working, right? And so um, starting to hear stories come out about about people that are just now getting into the market, and they're kind of speculating and all that. And so it reminds me a lot of previous times. I think back in the late 90s or whatever, when the Nasdaq was on fire. And of course, CNBC right now, Nasdaq record high. And so it's a strange environment right now. And of course, everything's sort of debatable. Let's see, the last statistic that I saw for the GDP number was like, minus 48% or something, right? So, and earnings are going to obviously be, negatively impacted. And so this market I guess, is just looking through all that. The valuations were kind of stretched, prior to all that. This run up here in the fall of 2019 was kind of weird because it was just basically, sort of a straight line. But anyway, it is what it is. The market is what it is. I want to go back to this hourly chart here. Um, Guys, some of you guys know I've been using 1743 cross for a long time, as far as like sort of short term, an indication of like the short term trend of the market, which obviously is up. But you can see that day I was talking about here, there was a little sort of a whipsaw here, right? Like the market was acting like it was gonna sell off, and then lo and behold, that Monday there was a positive news about a vaccine that essentially gapped the market up. 1743 crossed, and it's been uphill ever since. So a lot of crazy stuff going on. Let's take a look at the Dow real quick. Whoop, what did I even type in there? There's the Dow. The Dow's basically rallied back to, where all hell started breaking loose. The funny thing is that, and so, I took the fibs off of my S&P chart just because they barely even acted as resistance, right? So there was a lot of chopping around in that, but typically, I won't say typically, but a lot of times you'll see a market sell off and then retrace, 61.8, and it did sort of stall out there, but at this point, the fibs are practically meaningless. Might as well take it off of there. So it is what it is, right? Big sort of V-shaped rebound in the market. Whether the economy itself is having a V-shaped recovery, it's hard to tell. Check it out. The Nasdaq just absolutely on a tear, right? For a number of reasons. One of which is that the top companies in the Nasdaq have an extreme weighting in there. So, a lot of what's going on right now, I think, is just it's a momentum trade. The Fed's like put a lot of liquidity into the system and it's finding its way into the market. And so, you keep hearing the market is not the economy. And so, anyway, we're in one of like the strangest sort of environments that I can recall in a long time. And that's saying something, right? The market, goes through different phases in that. And the idea that, and there's a company went public the other day, has zero revenues, and I guess it's a new electric vehicle manufacturer, zero revenues, and now it has and a few days later it has a bigger market cap than Ford. So there's a lot of there's a lot of speculation in the market by novices, and whether I always say that I always joke around, CNBC pretends that individual investors and mom and pop drive the market, and I'm not really so sure of that. Obviously, it's institutions, but so it'll be interesting to see what happens here. The market is probably due for a pullback, and a Fed day like today often marks a turning point. You guys remember? Boy, I've got these marked back here, right? There was a Fed day like back here, right? Market ran up Fed day and then had a actual correction, and then ran up again. There was a Fed day, big sell off, right? Three in a row. And so don't be surprised if today perhaps marks a turning point. So I'm not sure what it's going to be interesting to hear what Powell says, because obviously the Fed has he's been on 60 Minutes and that type of thing, and there's been a ton of jawboning. And now that interest rates are at zero, they don't have a whole lot left except expanding their balance sheet and jawboning, right? They've already said they're not going to take interest rates negative, but who knows? So anyway, with all that said, the markets is and here's the interesting thing. One of the interesting things is that back after this sell-off here, shortly after that is when Jeffrey called me up one night and said, "Hey, we need to put together a recovery watch list, because this sell-off, these sell-offs like this always get some sort of a significant bounce, and I'm looking for the market to bounce." And so like right around this time where these lows were is when we rolled out that recovery watch list, which you can see up here, the recovery stocks list. But anyway, so a lot of those have done exceptional. A lot of them have hit both the targets, and I think went through those a couple of weeks ago. Today, I want to take a look at the trades that are triggering today. First of all, so we got three new trades that are triggering, and then we got a pretty decent list of pending stocks here that I wanted to take a look at. So let's start off with Netflix, and there you go. Interesting little pattern here on Netflix. There was a little bit of a gap up this morning, but I had already drawn this line. You guys may recall if you were watching last week. I drew this line and it was pretty close to where it is now. The actual trigger price, 428.80, was just above these highs here, and so you can see that there was no. Let's see, what was the high that day? 428.71. Yeah, and so basically, Netflix had a pretty decent sort of sideways consolidation here, and then It's a nice little sort of W pattern forming, and so it's got a pretty good look to it. It really does. Really good look to it. The target here on Netflix is, I'm gonna put that on here. Target on Netflix is 455, which is not really that unreasonable. It's right around those prior highs there, and so I mean that looks pretty good. Now, as far as the entry here this morning, um, theoretically, it wasn't a huge gap up. Let me put this on here, right there. Let's see. So today's open 436. You know, it's an expensive stock, right? But so anyway, so this thing's a buy anywhere in here, basically for this, and then as long as it hangs on and sort of hangs on, stays above. Here's the interesting thing is like you get sort of this open like this today. This could very easily go from red to green and uh and so I wouldn't put too much into that. Although, here's the thing is like with the overall market looking like, there's a potential sell off in the cards. It's still a pretty good pattern though. So anyway, let me mark that target on there and then I'll move on real quick. Target 455. So there you go. Big name, big cap, FANG stock, right? Netflix is a FANG stock. So looking pretty good. Next up is something called Fate Therapeutics. Big pop yesterday, and this is really actually a good setup, and that didn't really trigger ideally, right? Typically you get these cycles like this, and so you had this cycle up, and then you had the nice orderly pullback, and so the trigger was kind of floating down, right, with the idea that you'd get some narrow range consolidations like a pivot low, and then resume another one of these uptrends. And so what happened is, in my opinion, this is what it looks like when a stock sort of triggers prematurely. But then again, with a huge big long range day like that, obviously there was potentially some news or something. I didn't look, and a lot of times that kind of move starts. It kicks off a rally that carries, and so but it's kind of um it's kind of far away from what would have been the ideal trigger, which would have been closer to probably 31. So, and then of course you got the gap up this morning, so I have to keep an eye on that. That's going to be interesting when I'm tracking. And last but not least, gold, Barrett Gold, which haven't really followed gold a whole lot lately. I mean, the actual price of gold, but so anyways, nice orderly pullback. That's a pretty decent little pivot low there. Um, it's getting kind of close to the trigger price as we speak right now, and so there's nothing wrong with if a stock gaps up over the trigger price. Don't necessarily have to just automatically jump in immediately at the open. Although you can, I mean, theoretically, the idea is not to even overthink it. But so what you would do is you'd wait for the stock to open and then say, it's a little over the trigger price. Just jump in and not sweat the small stuff. So you can see that the initial stop here, and so these are all triggering in today, and so that initial stop is going to be just typically below the pattern low. Not always, but generally speaking. So you got a decent pivot low there, and you got a couple of days past it. In theory, as I look at this chart, I see that there's an area of resistance right there. This is kind of, and so my guess is like a few days ago or last week, the trigger was probably a bit higher up here, but that trigger, will trail down, and so theoretically, it's better to get in closer to the pivot low than it would be to wait for a break over that. But system's really flexible, and so this is actually a pretty nice pattern. I kind of like the look of this. I don't know what the correlation. I haven't been paying a whole lot of attention to the correlation between gold and the overall market, but this could be sort of a non-correlated type of trade to the overall market. I'm not positive of that, but pretty decent little pattern for a bounce here. So let's see. The target on this would be 26 bucks. So I'll just go ahead and mark that on here real quick, just so I have it. Sometimes when these trades trigger in, I forget to mark the target, and so it kind of gives a decent perspective. That target is percentage-wise, it's a decent target. It seems, I won't say easily achievable, but based on this pattern where it came from, all it's going to take is a little bit of extra rally on this cup here. And the other thing that's interesting about this is that you could always compensate a little bit. So today's open was 24.80, and so that's 70 cents, right? And so you could basically put your target at 26.70 to compensate for that gap if you just jumped right in this morning. So anyhow, there you go. So those are the three stocks that are triggering. This one looks pretty good. Actually, all three of them look pretty good. This Fate is a little funky because of the way that it triggered in, probably higher than a normal pattern, and of course Netflix. Netflix looks pretty good here too, be honest with you. So I thought, so there we go. So all three of those are officially triggered in now. Thought maybe we'd jam through these pending trades real quick just to see if any of these patterns stand out. So I'm not going to mark these up. Just going to start at the top here and look at them. That's actually a pretty nice looking pattern right there. I like the look of that. So I said I wasn't going to do this, but the trigger here is a close over 1850. Today's high is 1845. So basically like a close over 1850, this thing will trigger in. But let me zoom back on this a little bit. Yeah, this is a pretty nice little pattern right here. The way it sort of sold down, had that little, if I switched this to a candlestick chart, you'd see, let's see if I have a candlestick chart. Yeah, you get a little sell off, and then a candle that looks like that in a reversal. That's typically, look at what it did over here. Something, well, it was kind of similar, right? A little bit, but that's got a pretty good look to it. So kind of like the look of that. Let's see what the rest of these look like. RGEN, not too exciting yet. MOH, that one's got a nice look to it. There's a lot of rotation in the markets, right? For a while there, they were, it was all the stay-at-home stocks and the tech stocks and the FANG stocks, obviously, and a lot of other stuff. The airlines and all that got pummeled, and then there was rotation into like the beaten down and the garbage stocks, the energy stocks, and that, and now I think airlines are starting to sell back down, and so there's a lot of money that sloshes around and just kind of rotates from sector to sector, and so something like this. I mean, this is a really nice uptrend. Nice little pullback and a pivot low reversal, and so that's got a pretty good look to it. I like the look at MOH. Keep an eye on that. XLRN next on the list. Not too exciting. I mean, it's setting up basically. So that one's got a fairly decent look to it. Not bad. So you can pull up the pending list yourself and see what the trigger price is, but I'll go ahead and put this on here. Sometimes I actually like to put it on here because when I revisit it the following week, like I already had the entry on Netflix, and it was interesting to see how it spent so much time like sort of bumping up against the trigger and then finally closed above it like last night. So anyway, this one's got a fairly decent little pattern to it. That little kind of spike low yesterday doesn't look so bad. Move. This one's not as pretty. I mean, it's got sort of a scallop sell off, and so the bounces on the scallop sell off aren't really as pretty as like the one we just looked at here, where you kind of have like the spike pivot low. So, all right, moving on. WPM. There's another precious metal stock. This one's a silver stock. Kind of kind of see some potential here. Not too exciting though. It's kind of toppy looking, but that doesn't mean that it can't consolidate and then turn back up. So that's sort of the idea, is that you get this uptrend move, and then there's a pullback, and that pullback comes to an end, and then you get a resumption of the up move, right? I mean, that's basically the swing trading concept, right? Stocks in an uptrend, has a nice, decent little pullback, and then the uptrend resumes, and then of course we're looking to catch it on the way back up, right? So on WPM, right about there, 40.50. So ideally, that's how it would play out. Moving on, yet another one. And so, here's the idea is, you know, going back to GOLD, this one triggered in, right? And so, looking at these other ones on the pending list, I probably you wouldn't want to get too concentrated in these precious metal stocks. And so it is what it is. And, that's one of the things, is that you can sort of pick and choose from the list. Let's look at IOVA. All right, so I marked this one last week here as it needed to bounce and close through that, and so it's still consolidating, right? Still consolidating. It looks to me like the trigger has moved down a little bit. So see, IOVA 33.35. So there you go. So that's kind of nice. I mean, obviously it's going to need to break through, it's going to need to break through this resistance here, but the trigger has moved down here, and so I'd probably do it. If I change this to a line chart and you look at these closes, like all these closes are even this one is below the high, and so the closes are a little bit different than looking at the high. So this one has a lot of potential too. You can see there was a sell off back here, formed a big cup really quick, kind of plowed right through the target in a couple of days, and so back over here you had a big sell off and then a huge rebound really quick. And so this stock has a habit of selling off and then having a significant rebound relatively quickly. And so this consolidation pattern right here is longer than both these other ones. And so if it can get something going to the upside, pretty good bounce there. Yeah, the target's not calculated until I couldn't tell you where the target would be on this because it's not calculated until the thing actually triggers in. But I kind of like that one, so I'd keep an eye on that. Now today, of course, it's selling down, and so it may be sometime out in the future. And theoretically, if it takes if it goes down a little bit more, this could even by next week, this could even be lower. It just depends on what it looks like. And then of course, if it were to sell off like this, it'd probably just drop off the list. It would be no longer pending. But I kind of like the look of that. And then speaking of mRNA, look at this. This is boy, there's a lot of potential here. So when I did this last week, obviously the trigger price was basically up here, like just over that high. So call it, 63 and a half on mRNA now. The trigger price has moved down to 62.20. Let's see, what's this high right here? 61.93. So that's, there you go. 62.20, kind of right where I have this line there. So yeah, it's got some decent potential. A lot of times you'll see a big sell off like that, and then the first rebound, and then a little bit of sideways consolidation. But I kind of like that little curve right there. So this could, a stock like this obviously moves on news, right? This is right here this day I'm sorry, it wasn't that day. It was this day. No, what day was it? Oh, 518. Okay. I was thinking about the overall market, the way that the overall market sort of, like I explained earlier, this latest leg of the rally started on 518 when this particular company, came out with news about a COVID vaccine. And it had sort of been building up, and that it's funny that the overall market, the rally started with these guys announcing the COVID vaccine potential on the 18th, and then that was the last hurrah of this rally before it sold off. So anyway, my point here was that on any news, this thing could blast through that. It could blast through the trade barrier, the trigger price there with the long range day, and end up up here in the 70s. And so that would actually be one to keep a really super close eye on. Maybe set, most brokers now you can set an alert, right? And so what you do is you set an alert that says, hey, at 61.50 or $62, if this stock hits that, send me an alert. And then you could look at the volume, see if there was something going on, because my guess is that, and of course, there could be a day where it just pops up here and just barely closes above it and this and that. But my guess is that there's a lot of potential for this to just rip right through that target and keep going. Or I'm sorry, not the target, the rip right through the trade barrier there. I'm going to mark this one so I can remember what it is next week. So the trigger is 62.20. Yeah. And so it'll be extremely interesting to see what happens with this one. So I'm going to say that this is one that you could potentially, jump on board as it's going through the trigger. And then, quite frankly, the stop could basically, and it's hard for me to tell exactly where the stop would be, but a really super tight stop would be basically just like 56.50, just sort of right under these lows, once it breaks through there, if it breaks through there. That one's kind of the most exciting one I've seen so far. Excuse me, although a bit speculative, obviously. But yeah, the market nowadays, news drives stocks, right? It's one of those it's a speculative market right now. That's the environment we're in, you know. I see stocks every day now that are making like just absolutely gargantuan moves because there's like sort of this, day trading herd of people that are looking for like, what's going up, and then they're just jumping on board. And so kind of interesting. Yeah, there's a lot of Fed jawboning going on today. I turned my head and look at CNBC, and they got Richard Fisher, who was a former Fed president, Dallas Fed president. He's always interesting, but yeah, I'm looking forward to, I guess, listening to what Powell has to say. But more importantly, what the market reaction is going to be to it. So, let's see, QDEL. I made a typo there. This one's a beauty. Look at that. See, I kind of wish I had marked this last week and said, hey, what's the. I wish I had marked the trigger price last week, but basically I did mark it. I just didn't put the exact price on there. And so let me come back to this. There we go. Sometimes I can't get these trend lines perfect. So anyway, last week, it had the trigger price was like just above this little pivot high here. You had sort of the sell down, pivot low, couple of day rally, and then a retest of the lows. Right now, you got a trend line break, and so just like I always explain, this should make sense too, right? And here's the cool thing about this is like obviously, you're seeing this stuff on the charts that makes sense. I know most of you guys are into charts and technical analysis, and so all this stuff makes sense. But the cool thing is that the system itself is, I mean, it doesn't have like pattern recognition, but in a way, the way that it's programmed is kind of, everything jives with like what makes sense technically, usually. Now, some of them are a little bit weird, but programmatically, it always fascinates me how consistent the automated system is with what I see on the charts and what you would sort of, look at as technically speaking. And so anyway, what my point is here is that now this trigger price has moved down to 164, which is basically just right. It's just a little bit over today's high. Today's high is 162.78, and so this stock, big huge run up, and then this nice consolidation, just now getting like a trend line break here, right? And so all it's got to do now is close, and that's one of like the little sort of secret sauces in the system is, and you've always heard, what's most important is the close of a stock, how they close it, right? And so by waiting for the stock to close over the trigger price, you avoid getting faked out on a day where, and today would be a good day for that, right? Like everything could be going along swimmingly, and then all of a sudden somebody hears something they don't like on Jay Powell's. Powell says something the market doesn't like, or the algos have a negative reaction, and next thing you know, you get a big red down day, and so and I'm not saying that's going to happen, but the potential exists, right? We just had a big run up. The market's kind of got a little overbought there, and so there is potential for there's potential for one of two things to happen. So we're seeing some early weakness, and yesterday was a little bit of a down day, and so um, there's potential for a little bit of for the market to sort of reverse and retrench or pull back or roll over, whatever, today. And so using the closing prices kind of gives you a little bit of an edge, because that way we don't have to worry about like if this thing broke through the trigger price, say intraday, and then all of a sudden the market reversed and it sold off. So we'll see what happens tomorrow. It's a double-edged sword though, like the one we looked at earlier that had the big long range day that closed way above the trigger. So sometimes waiting for the closing price. But I always wonder why on TV they use the line charts, right? Because I'm used to looking at candles, or I like the simplicity and sort of the open, high, low, close. I like how they look. I do look through a lot of candlestick charts too, though. But I can visualize the candles looking at this. But anyway, long story short, I always wonder why they use just the line charts or mountain charts on TV, and then it kind of dawned on me one day that that's basically closing prices, and so that kind of makes sense in a way, right? Because the old adage is, it doesn't matter, what the stock did intraday, it's how it closed that's important. And so there you go. This is a great setup, by the way. This is an absolute beauty. Um, and so, just like going through this list, there's only two more to go through. And so QDEL and mRNA are my two favorites out of this list right here. So another precious metal stock that yeah, there's some potential here, right? Definitely some potential. So we got one, we got the one that's triggered in today, and so I don't really see any point in going in with too many of them. So I'd probably pass on that. And last but not least, here you go. Here's one that last week I was talking about how I'll move that a little bit. Actually, I'll just get rid of it. So, last week we needed to close over these highs in order to trigger it in. And as you can see, it never triggered in, right? Continued to sort of consolidate and sell off a little bit. And so basically, this one's kind of, still setting up here. um, and so at this point, the trigger price has come down a little bit. It's come down to here. So what you got here basically is kind of a little bit. The pattern's sort of changed a little bit, right? Now what you have is like sort of a little bull flag working. Excuse me. And so there's still some potential here, right? My guess is that one of two things is going to happen here. One of two things is going to happen. Either it's going to like break out of this little sort of bull flag wedge or whatever you want to call it, and remember a close. It's got to close above that level in order to trigger. And so sometimes you get, something that looks like that, and it may not look all that great, and it's like a slingshot, right? And and so you just like, you break out this little thing and you slingshot higher up here. There's a lot of potential for that. Back in the old days, I used to talk about like looking at and this is not the greatest example, but you look at the cups, right? Instead of looking at the price, you look at the space, the white space in between the cups. And stocks they have a habit of, cupping. And so this is a decent candidate for sort of a slingshot higher to form like a cup back up to this area. So not a bad, let's see, health services, medical instruments and supplies. Yeah, not a bad looking stock, tell you the truth. So out of all out of all the ones we looked at, yeah, this is not bad. I mean, it's not. I don't think it's my favorite, but I think there's some potential here. Oh, what I was about to say is, if for some reason if this were to break down, right? If you visualize it like sort of, not not breaking out of the upside here and forming the cup. If the opposite happens, if it starts to sell down and breaks down, at some point down here, and I don't know what the exact level would be, but at some point down there, it would just drop off the list, right? Probably on if something like that happened. Of course, that's when all the craziness in the market was happening. But if it were to sell down, to a certain extent and break that pattern, then it just drops off the list. Make room for something else. This one's actually been on the list for a while. I'm gonna get rid of that because it'll confuse it. So there you go. That's a pretty decent list of pending stocks there. It's funny. I started off with like a parallel channel here, and then I just kind of kept tweaking it to where it's like the falling wedge pattern. So, and of course, we're interested in sort of the very short term here. And so that's got a lot of potential. So there you go. I think I'm gonna go ahead and just wrap it up here. Let's take a look and see. I like to look at the SPY. I'm gonna wrap it up here. We looked at the stocks that are triggering today, and we looked through the pending trades, and I showed a few that have really decent setups. And so real quick, just quick look at the SPY. You can see that price, and here's the day too, right? The 18th. Look at that. There's the 200-day moving average, which is kind of flat, but the price ever since there's been like these three little dips, right? Three little dips that they're practically nothing, and it's pretty amazing to me. There you go. There's your basically your three little dips. Now, you had the huge sell off and then this first rebound, and then this was a little bit of an unusual sort of consolidation in the way that there's a gap on both sides of that. So those 3 days were peculiar. And then of course, right here was what I've noticed is that, there's a definite you almost can't deny this. I mean, there's a definite sort of the administration and the Fed really have done their darndest to try and talk this market up, right? You see these Trump even today. Trump tweeted something about the Nasdaq at a new high, and so it's clear for quite some time that Trump and the administration, Kudlow and Navarro and, all the good old boys, but, they talk about the market a lot. And so they think that they're using the market as a proxy for how well things are going. And that's been pretty obvious for quite some time. And so they're constantly trying to talk up the market, and the economy and all that good stuff. And they've been aided and abetted by the Fed, obviously. Remember when Trump was said the Fed was crazy because they had they were trying to they were trying to normalize rates and reduce the balance sheet. And boy, he went through, and he kept saying that they should, lower interest rates and do QE and all this stuff. And he was like really anti-Powell for a long time there. And then lo and behold, the coronavirus came along, the pandemic, and what did Powell do? He did exactly what Trump wanted him to do: was to lower interest rates to zero, and launch QE. So it's funny how that worked out, but obviously that has a lot to do with the right side of this V recovery here. Um, but here's the thing: the market. It's easy when the market's going up to say, oh yeah, well, we're going to look past a 48% drop in GDP. We're going to look past the fact that the economy's in recession. We're going to look past the fact that, S&P earnings are, going to take a big hit and decline. We're going to look past the fact that millions of people are unemployed, right? And a lot of those jobs aren't coming back. But if you think about it, this whole the federal government is subsidizing the unemployed people with the extra $600 a week. That they're quite a bit of money for a lot of people. Like I said earlier, half the people are making more money on unemployment than they were working, and so that extra money is most likely I know it's being used to pay down debt because you've seen the statistics on that, and it's also being used to speculate in the stock market, in my opinion. And there was an article on Market Watch this morning that said, there's basically, another month and a half of that, and unless they pass like a new bill or whatever, but that's gonna be sort of a tough one. Um, that's gonna be a really tough one. because most people can't live off of regular unemployment, but you throw $600 a week on top of that, and then it's you read these stories about people they don't want to go back to work because they're making more money than they would. And so when you talk about savings nowadays, I don't think I don't think a lot of people even, there's no reason to have a passbook savings account because it pays no interest. And so I think people are using that extra money to speculate in the stock market, and so enabled by, whoever. And so that's kind of where we are. And typically these things don't. I saw a story last night. It might have been a Market Watch or something, but about I think it was a Starbucks employee, a barista, and she had just opened a Robinhood account and was speculating in stocks and making money. you know. So that's where we are in this cycle, and I don't know what it reminds me of, but probably the late 90s or something, but who knows. So anyway, you got these little dips here, and man, markets extended. Even the next little dip, it'll be interesting to see. It almost feels like the market needs a real catalyst to sell off. But I'm going to tell you something. Every time that the market finally, reaches a point where nobody can think of any good reason for it to sell off, and obviously, we can all think of, the second wave and all that. So, but anyway, if this tide turns, that's a long way down. But we're back to this thing where there's a ton of support, right? Now there is a gap here that even just a normal little dip right here probably be a healthy thing, but because there's that gap right there. Actually, there's a lot of gaps on this chart, but that'd be the first one to fill, and just sort of a normal consolidation. I kind of, in the back of my mind, I kind of think that if there's a real turn in the market, that it'll be kind of obvious. A lot of times it is. Like you see like a big distribution day, right? Like IBD always has, what they call distribution days where it's like and they're kind of obvious, like this particular day right here. You could have called that like, big long range distribution day, and typically, that's your biggest warning sign of all. Or, quite frankly, that, this day where you had that big gap down and closed red. And so until we see something like that, and see that's why like these little 2 day sell-offs are so insidious, is because, and especially after a sell-off like that, you see a two long range days down, you think, okay, now it's time for low backing and filling, and then the market, they magically come up with some news like right here to kick off another leg. And a lot of this I think is probably a short squeeze, I'll be honest with you. So anyway, it's going to be interesting, but the system itself doesn't care about any of that. The system's looking for individual stock chart patterns, and so no matter what happens with the market, it is what it is. So anyhow, thanks for tuning in. I'll see you guys here same time